Hello and welcome to Stock Market Fever. Today is Wednesday, May 18th, and what a difference a day makes!
We know that this is a time for us to be tightly focused on the path ahead and on getting inflation back down to 2%. We know how people are suffering from high inflation, and we have both the tools and the resolve to get inflation back down. And no one should doubt our resolve in doing that.
After a 400-point upsurge following Fed Chairman Jerome Powell's talk in which he emphasized the Fed's commitment to bringing down inflation, by ratcheting up interest rates, investors panicked and sold off shares like wildfire. The Dow Jones dropped over 1,100 points, its biggest one-day loss since June 2020, to lose over 3.5% of value. And tech stock-heavy NASDAQ dropped 566 points to lose over 4.5% of value in today's session. Many investors have been burned trying to guess the bottom of this year's market rout. But as Sam Stovall, chief investment strategist at CFRA, noted, bottoms occur when there's nobody left to sell. So apparently we have not reached the bottom, as evidenced of plenty of people still left to sell, today at least. Just about every sector was down today as investors cut their losses and headed for cash. Retail leading stocks were particularly hard hit. Walmart was particularly hard hit, dropping over $8 per share to close down at $122.43, whereas just 2 days earlier, before reporting an earnings miss and weak guidance, it was as high as $150. And today, Target was absolutely walloped, dropping over $53 per share to close at just over $161. Target revealed a huge first-quarter earnings miss, owing to cost hikes in areas like freight and inventories. The company reported first-quarter earnings per share of $2.16, down 48.2% from $4.17 in 2021. Target CEO Brian Cornell explained, "Throughout the quarter, we faced unexpectedly high costs, driven by a number of factors, resulting in profitability that came in well below our expectations and well below where we expect to operate over time." Although Target's comparable sales grew 3.3% on top of 22.9% growth last year, investors were clearly spooked by the big earnings miss and an operating margin rate of 5.3%, which was well below expectations, driven primarily by gross margin pressure reflecting actions to reduce excess inventory, as well as higher freight, wages, and transportation costs. Worst of all, Target made it clear in the announcement that they weren't expecting any significant improvement in the near future, as they expressed weak fiscal guidance, noting, "For second quarter 2022, the company expects its operating income margin rate will be in a wide range centered around first quarter's operating margin rate of 5.3%. For full year 2022, the company continues to expect low to mid-single-digit revenue growth." So, where do we go from here? What's in store for Target? Will it continue to plunge lower as investors fear even worse growth and possibly losses moving forward, as higher costs ravage the company and our world economy? Or is that fear already built into the price it closed at today, $161 and change? While we do not offer advice, we believe that Target still has a way to go down some and show that management can figure a way to get costs better under control and halt the slide in profit margins. We note that Target reached a lower price of $155 earlier in the session before settling back in at $161. We believe that $155 support will be tested again and perhaps found wanting. As for the overall market, we believe that steep sell-offs like today may very well repeat, followed by dead cat bounces back up until there is clear evidence that inflation is under control. or until individual companies get a grip on their higher costs, and through a combination of lower stock prices and stabilized or increasing margins, their outlook improves. We are, however, less pessimistic in oil stocks and disclose that we have a position that reflects this belief. We believe that the rising price of oil will at least offset any cost of production and distribution, and that the rise in oil will continue through the summer as a result of an imbalance in supply and demand. But what do you think? Where do you think Target is headed in the short run and long run? And how do you think the overall market will behave in the coming weeks and months ahead? Please leave your thoughts and comments below, as we'd love to hear from you. And please be sure to like and subscribe to Stock Market Fever for future actionable stock market news and alerts.